GM. GM, GM. GM, GM. So, daily levels, Thursday, 18th of April. And here we are. Here's total 3. So one of the things I've been seeing a little bit of is that a massive alt season is coming, which seems more like cope than anything. People asking for alt season, it literally happened already when the entire market went up 2.5x with multiple 10s, 20, 50x, even some 100x new coins. And majors like Solana went 20x off the lows, but 10x since October. So, yeah. I think that was alt season. It might not have been every alt, but the market went up significantly. It's now in a phase where it needs to reaccumulate. At a certain point, like a shakeout is this candle here. Dips down, strong reaction, goes higher. A correction is this. Drops down, doesn't bounce immediately, makes a lower high, comes to the lows again, spends some time going sideways, builds itself back up, consolidates at the peak, consolidates at the highs, and then rallies higher. So we were consolidating, sell off, bounce back to the highs, sell off, but held a higher low, consolidating, and then big impulsive candles broke down below the previous support, retested the previous support here on this wick on Monday, rejected it. Below the bands are red and they're expanding, they're getting wider apart, not like over here where the bands stayed close together. This is very, very, very unlikely to be just a quick shakeout before a rally higher. Because like I keep saying over and over and over again, a bull market is a long, drawn-out thing. We've been in a bull market technically since January of 2023, when Bitcoin made that first big short squeeze off the lows. Bitcoin has been going up only since then, with a few months of consolidation in between. Alts have really been in a bull market since, I would class it as over here. So October's rally up, once it made a new high above the April level, bull market, a very, very early bull beginning for alts, and then on this breakout, undeniably, bull market for alts since December. So alts have lagged Bitcoin significantly because they spent 2023 as a whole, right? Alts spent 2023 bearish, couldn't make new highs, couldn't make new lows either, so just compressing, right? Weren't able to make new lows along here, wasn't able to make new highs along here, and just sort of a couple of fake outs either side, but really compressing, and then broke out. Now, we are months ahead of schedule if you're going by a 4-year cycle. There also doesn't need to be a 4-year cycle, right? That's something that's played out in the past due to election cycle. People say the halving. Interest rate cycle follows pretty closely. Liquidity conditions follow quite closely too. Global liquidity. You'll see that anytime global liquidity was trending down, so were alts, and so was Bitcoin. And I think we've reached a local top based upon how much liquidity there is in the markets, right? Global liquidity is at all-time highs. You can see that from the Capital Wars Substack. There was an update there on 16th of April, so what's that, 2 days ago? Global liquidity barely grew last week, but it grew, right? It rose 215 billion, but out of 171 trillion, that's not a whole lot. Slowing central bank liquidity growth, weaker collateral values, blah, 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 etc., etc., etc. The point is, if you look here, this has been since 2021, weekly global liquidity was rising all the way through 2021. Where was this? June until basically December. What did the market do? The market went up. June until December of 2021. That was this final leg of the bull. There's June into July, and there's the top in November. That's important to note because this global liquidity continued rising until about January of 2022, by which point alts were already down here and Bitcoin was obviously lower too. Then we had negative liquidity conditions all the way through 2022, bottoming out in September, October time. It was actually mid to late October, which of course aligned pretty well with when the market bottomed out, with the FTX collapse. Alts kept going lower into December, but BTC bottomed in November with FTX collapse. And even something like ETH actually bottomed in June, and it had a second touch down in November. Regardless, and of course the most important one, the stock market, bottomed exactly when liquidity did. The stock market is a much closer analogy, like to the point where, closer comparison I should say, people talk about Bitcoin being just a liquidity index. But if you actually look at this, the absolute peak in global liquidity was January, maybe very early February of 2022. The S&P topped out in January. Bitcoin topped out in November. The S&P bottomed in October. Bitcoin bottomed in November. Liquidity bottomed basically in October, November. So there's a closer correlation between the S&P, which makes sense because it's a more established market. Bitcoin has other factors, ETFs. You're always going to have people who don't like Bitcoin. You're going to have geopolitical stuff. Regardless, since then, since October 2022, which was when the UK had a gilt crisis, and that catalyzed the Fed to take precautionary measures so it doesn't happen in the US, we've had rising liquidity. Right? Everyone knows this. It's up at all-time highs. It's reached this point here, and it's sort of double topping, sideways, whatever. It doesn't mean it's going to go down again. It's just slowed. Now, the markets have also stalled out, right? If you look at this, October up to July, quick pullback, and up to here. October, up into the summer, pullback, away it goes again. It's not perfect, but it's as close of a proxy as you're going to have. So, what's going to happen next? I'm starting to see, not enough yet. I don't think there's enough, this is over, right? We're still in the cope phase a little bit. From sentiment I'm reading around, it's like basically people saying, I'm not going to sell. But it was, I've read a few different comments where it's something along the lines of, this looks terrible, but I'm not going to sell. And it's just a correction. We just have to ride it out, and then we're fine. I also think a lot of people don't even have money to buy more. So they're sort of conflicting data points, because on one hand, I do think that almost everyone is fully invested or got themselves fully invested before the sell-off. Because this is just what happens. Like, people were so sidelined in October, but they didn't want to buy in October. They thought it was too high. They didn't want to buy in November or December because there was no pullback. Then January, people started buying. Then February, buy more. And then March, everyone was buying. It's a really interesting phenomenon. This happens over and over and over and over again. People always continue allocating after the top or right into the top. And then when it slides back to levels, seen only a few weeks ago, they refuse to sell because they don't want to sell on the way down. So the same reason why people who didn't want to buy on the way up, when smart money was buying, and it was clearly breaking out an early stage, and we were getting long, and adding more. People didn't want to buy because at this point it was just only going up, right? It didn't look like it was pulling back at all. Now, they were buying in here because it FOMO felt like it was too late. We've retraced the whole thing. And now it's like, well, fuck, I guess I'm in at the wrong place at the wrong price, but I'm just not going to sell. That doesn't usually lead to a reversal. It usually leads to more chop, more downside. But the other part, if you imagine that most people have put all their money in, so they couldn't even buy the dip if they wanted to, that can also be something that comes before a bounce. So I'm expecting a bounce at some point, probably relatively soon. Or we maybe just do something like that. And a lot of that's because if it starts to rally up, people think, oh, that was it was the dip, but I didn't have any money to buy the dip and I couldn't even buy the dip, and so they'll double down, they'll add leverage, or they'll just keep holding, and then it'll drift back down. Quite often it bounces before people get a chance to get back in. That's where these kind of complacency bounces come from, right? If you look at like over here, at this part, you get a big flush, big leverage shakeout. The leverage shakeout forces people out of their positions, and people always get liquidated on these moves. So they get liquidated because they use too much leverage. That means they have no money left. And remember, the only thing that makes the market moves on the lower time frames like this based upon the smaller fish. Because the big players don't use leverage or don't get liquidated. So they don't get affected by these sell-offs. They can just keep holding or buy more because they don't use leverage and they always have extra capital. But if you got liquidated here, you missed the bounce, it comes back down 3 days later, it rallies again, all within 10 days. The average person doesn't get money every 10 days. If someone got liquidated here, they didn't have time to buy this second dip because it only happened a few days later, right? So they didn't have time to reload because they get paid fortnightly, monthly, whatever. Then it rallies up again and then all the way back down. And then when it comes back down to here, they probably do get money. This is probably like 3 weeks later. Maybe some people have got some money together since then, but they don't want to buy here. They don't want to buy there because it looks like it's going lower. And then it rallies up, and then they don't want to buy here because the band's are still red, it still looks bad. Then it starts to rise up, and they're like, oh, I'm not buying on the way up, I'll buy a dip. And then the dip never comes, and the same thing happens again. And eventually they end up FOMOing in here, getting liquidated again, getting left behind, and then getting fully invested with whatever they have left up here. But by this point they've learned, I'm not going to use leverage anymore, right? Because I got wrecked here, so I'm not going to use leverage. So they just go all in spot with whatever they have left up here, and then of course we sell off. And now, the general reading I have is that people aren't, like leverage people are gone, right? They're wrecked. That was a big nasty leverage shakeout on alts. So it's just spot holders left. But they don't have any money to buy the dip. So they're just hoping it goes up. And they're like, I don't want to sell because it's really painful to realize the loss. I don't want to sell. So I'm just going to hold. And that general setup, which I think I'm pretty accurate on, obviously you can't read sentiment perfectly, but I feel like my reading of sentiment in that direction is pretty solid. And you can see this just from the chart. Because we've an uninterrupted uptrend from October all the way until March. And now, nobody who bought before March, right, this is the 5th of March, was the lows we revisited. So nobody who bought before March is underwater. And yet, when I read online, it's as if people are drowning. And that tells me that, yes, the majority came in very late, bought in at much higher prices, and they're now suffering. And that's why when you hear people saying this is just a quick shakeout and we're going to go so much higher, it doesn't make sense because those people who bought super late are the only ones losing. We're not losing. I've been, anyone buying from last year, from 2022, even from early this year, even from January this year, nobody there's losing. And of course, it doesn't feel good. You still would rather it goes up than down. It's not like you don't want it to go up. But this can go a lot lower, or it can go sideways and choppy for a while. And I'd expect that. Usually when you have a big breakdown like this, like the difference between this one is, over here, we were still in the uptrend and we had a quick shakeout with a strong reaction bounce. There was no reaction to this bounce. There was no reaction to this sell-off. The bands never turned red on that one because we were in solid uptrend. We hadn't consolidated long. We dipped down. We double bottomed. We held. The band stayed green all this time. Then we had a slow decline. This is different. We rallied up. We spent about a month consolidating, right? Looking bullish. So everyone's getting more and more long because alts look great. And then boom, down it breaks and there's no bounce. This just isn't. This just isn't bullish. Not in the short term. Not in the next few weeks. I don't see how this is going to new highs. So, if it's not going to new highs, then it's going to either go lower or it's going to go sideways. So you might have that red path. You might do the grind lower, right? And then bottom out there. We might rally up and back down and across. There's a million different paths it can go to. I just don't see it going above these highs anytime soon. I also think this is not the time to be bearish. I'm starting to feel more and more bullish by the minute because I think the capitulation is getting closer and closer and closer, and it'll soon be time to start chipping away into new coins. But regardless of what happens, there needs to be some kind of sideways consolidation first, and then it starts to move up. So you see the downtrend, you see it go sideways, you see it start to build up, and you get in there. That's the simple version. But of course, when you say that, it also leaves you open to stuff like this. If I look at, let's go to another one, total, and we'll look at the full chart. You also say that. So like what I would like to see here typically would be this. It would go sideways, it would sweep out the lows, it would form a nice sideways, and it would start to move like this, and then boom, away we go. And my way of trading it, right, I would just buy spot if you're here and you want to hold and you don't mind holding longer term. And then once it starts to show that sweep, comes back inside and is up here, that's when you start to get add longs. That's when the structure's looking really good for a rally. But of course, the market doesn't always work like that. So you're saying, oh, well, mid-May we should start to build up some strength again and bottom out, and here we go. And so you think that and you plan that, and then what happens? Market does something unexpected, such as strong rally up, and then starts to hold here for a couple of days. And makes people think, oh shit, was this first path wrong? Have I missed the bottom? Should I get in? And then people convince themselves to get in there, and then boom, down it goes. I actually think the sooner we rally, the worse it is, short term, right? Total 3, I'm looking at this. Total, sorry. I don't know if it goes lower first or just straight up. That's irrelevant. If we go up to here, everyone's going to think they've missed the bottom, and that actually opens up the potential for a lower high that takes us to new lows. And then probably some dead sideways, last sweep, and then we go from there. That's a great path to trade, and I'm going to trade it that way. I'm not looking for shorts here when Bitcoin's at 60k and holding. Even though 60k isn't holding strong, in my opinion, it still has held, and we can absolutely see a rally up. But I think that a rally up here right now is most likely going to lead to at least a revisit of the lows for Bitcoin, right? If not, lower prices. It goes up, down more, and then away we go again. I'm not bearish. I want to buy. But I think we have to have some weeks or months of pain. And right now, there's kind of mixed signals. I think there's a lot more bearishness, obviously, than there was. And it's this funny thing, like 60k held again. But it didn't hold the way people wanted it to. So they're bearish. Right? And because when you look at this, and this is where charts will lie to you, 60k held, 60k held, 60k held. People are like, yeah, but the daily close was weak. Look at that red candle. Small bounce here, then we go lower. Wait a minute. Did 60k hold? Yes. We dipped below it slightly, got back above pretty quickly. So why does... Remember, the big players don't use candlestick charts. Right? If you're just a fucking $1 billion whale and you're like, I've got orders at 60k, and you put 60k orders in, and then you wake up the next day and it's held 60k. Do you care about the candlesticks? No. Candlesticks don't predict anything. They're a way to manage risk. You're like, okay, this candlestick has a low at 59.5. If it goes below that, I guess I'm wrong. If it stays above that, I consider it support. Right? So, it doesn't have to look like you want it to look. 60k is holding. Now, it will hold until it doesn't, but given that it's held, and people are still, they're sort of just expecting it to break now, and nothing about this looks like it would be somewhere that you'd want to buy, we probably go up. I don't know though. The trend is down, and I'm not going to fight the trend, right? Because right now, I talked about this yesterday with the 4-hour bands. I said these bands are still holding bearish, and we probably go to 60, and we went to 60. That's not magical predicting the future. It's a downtrend. It's still a strong 4-hour downtrend, making low, lower high, lower low, lower high, lower low. Here, sorry, and a lower high could come. We can also squeeze up, take out some stops and squeeze people up. But is there going to be enough? Is there enough bearishness? Right? Are people actually bearish enough? Are they short enough? Because we've undoubtedly got bearish ETFs right now. That's a 165 million outflow day. But it's not just Grayscale. It's Bitwise and ARK. You're starting to see outflows from some of these ETFs. There's no way to cut that other than this is people who bought in that are selling already. This is not slow money. These are not long-term investors. Remember, these have existed since the 11th of January. 3 months. Bitwise did not exist. BITB didn't exist. ARKB did not exist. These are brand new. They're not Grayscale. There was no money in these before January. So this like 62, 65 million that's come out of 55 million that's come out of ARK in the last 2 days. That's $55 million of outflows from people who bought in within the last 3 months. That is not good because the narrative that was being pushed to you was that all the money that comes into the ETF is going to stay forever. Now, obviously anybody with a brain knows that's illogical. People are always going to buy and they're always going to sell. It's true that there's also still 12.2 billion, right? There's 12.2 billion net inflows, which greatly exceeded anyone's expectations. So when you have 50 million flowing out, 50 million out of 12 billion is not a lot. But who says it's going to stop there, right? You can go both ways with this. And this is why you're going to see, this is why I think we're going to see choppy conditions up and down over the next little while. Because I could look at this and say, these outflows are bad. The IBIT inflows are weak. Fidelity haven't bought anything in like 4 days, right? $1 million. Big fucking whoop. Grayscale outflows are not slowing down. They keep coming back. They keep chipping in 100 mil days every couple of days. And now, Bitwise and ARK are having people getting out after getting in less than 3 months ago. Holy shit, this looks so bad, this looks so weak. This is going to continue because people always expect. Remember when the inflows were 500 million a day, a billion a day, and people thought, remember people were writing on Twitter, like that was one of the better sentiment gauges, looking back. People writing on Twitter like, oh, 500 million a day multiplied by 250 trading days. Here's how many inflows we're going to have over a year. It's going to be like fucking 40 billion. You can't extrapolate 1 day of flows out across a year. So, bearish. The flows are weak. There's outflows coming. Grayscale aren't slowing down. Bitcoin's price is down. So everyone who bought in the last couple of months is underwater. Bullish. This was already the most successful ETF launch in history. There's never been 12 billion of inflows into an ETF within the first 3 months. So we went maybe so far so fast that the market needs to catch up. And it's not that the flows are bearish, it's that they were so bullish before that the comparison seems bearish now. Which is true? Both and neither, right? Because everyone can spin something into their own bias if they want. If I want to be bull and defend my bags, I'll say that. We've had record inflows, it's just cooling off. Only 20% of the ETF buyers are actually able to buy, which is still true. There's only the avenues for ETFs are only getting online. Not everyone can buy it, not every wealth manager, not every investment advisor can even access it yet. TradFi moves slow. Grayscale are running out of coins. Right? Every day they sell more is a day they have less coins. There's your bullish propaganda, bullish hopium. And BlackRock's not buying much. That's fine because they bought 15 billion. Of course they're going to slow down a bit. If you want to do that, you can do that. If you want to be bearish, you can be bearish. So what do you do in that case? You refer to the charts. Bitcoin's chart is not bullish. Okay? This is not a bullish chart on the lower time frames. On the higher time frames, it's holding 60, which is fine, and I would say is decent, set up for at least a bounce. And I think this is the part where it gets really choppy. I don't think we see a clean trend from here. Because if we were going to break the lows, we would have broken them. And so I think we see green today, right? But we probably don't see as much green as people want. Yeah. I don't think we see huge rallies. I think we just see, okay, people are a bit too short, and then it comes back down, and then it goes sideways, and that's it. And it's just bit up, bit down, no massive move, because even though 60k is holding, clearly people are selling. And the expectation would be they're going to sell more once the New York session comes. And